U.S. equities falter. Microsoft, Meta lead gains amid earnings season. The entire stock market experienced a slowdown as early optimistic momentum faded, leaving investors cautious ahead of major earnings reports from tech giants Amazon and Apple, which are anticipated after the market closes. But here's where it gets controversial. While some stocks are soaring on recent positive earnings, others, particularly in the semiconductor sector, are sinking, illustrating a split in market performance that sparks debate about the broader health of the economy. On a day when traders in New York City's stock exchange floor navigated fluctuating sentiments, U.S. equity indices closed lower, driven by fresh corporate earnings results alongside mixed economic indicators. The Dow Industrial Average slipped by roughly 0.75%. The S&P 500 edged down a little more than 0.33%. And the tech-heavy Nasdaq barely moved, almost flat. Zooming in on specific companies, Microsoft shares shot up by around 3.5%, fueled by a robust earnings report and its momentary crossing of the $4 trillion valuation threshold. This milestone made Microsoft only the second publicly traded company, after Nvidia, to reach such a valuation. Meanwhile, Meta platform soared over 11%, hitting a fresh all-time high at roughly $773.44. Thanks to a surge in its core advertising business, driven by advances in artificial intelligence that boosted revenue forecasts. Conversely, some AI-connected names face setbacks. Chipmakers like Broadcom fell nearly 3%, and Nvidia dipped slightly, dragging the semiconductor index down by over 3%. This decline marks one of the most significant daily percentage drops for the sector since mid-April, highlighting the polarization within the tech industry. Ellen Hasen, a prominent market strategist, pointed out that the market today displays a clear divide. Some tech giants like Microsoft and Meta are thriving, while many semiconductor companies struggle, prompting the question, is this resilience sustainable or just a temporary blip? Through Thursday morning, data show that over 80% of the 297 S&P 500 companies that reported earnings exceeded analyst expectations, indicating a generally positive earnings season compared to previous quarters. However, after the bell, Amazon's stock fell by about 2.6% following its earnings release, adding to the day's mixed results. The market's overall decline was reflected across the board. The Dow dropped 330 points to close just above 44,130. The S&P declined by around 24 points, and the Nasdaq dipped a negligible amount, closing slightly below 21,122. Earlier in the session, the indices experienced a temporary rise of up to 1%, with the Nasdaq reaching a 1.5% increase. Movements not seen since early July, only to retreat later. Economic data painted a picture of rising inflation, with new tariffs filtering into consumer prices and raising fears that inflationary pressures could intensify moving forward. At the same time, weekly jobless claims remained stable, signaling that the labor market continues to hold steady. Market watchers now turn their attention to Friday's upcoming non-farm payroll report and the potential impact of tariff negotiations. President Trump is expected to announce higher tariff rates on countries that haven't reached trade agreements, possibly affecting market dynamics. Interestingly, Mexico was granted a 90-day reprieve from higher tariffs, which may soften some tensions. Since a sharp sell-off in April triggered by tariff threats, the market has seen a cautious rebound, with the S&P climbing over 2%, the Nasdaq rising nearly 4%, and the Dow inching up just a bit, keeping the streak of monthly gains alive for the major indices. Sector-wise, pharmaceutical stocks also took a hit after the White House urged major pharma CEOs to reduce drug prices in the U.S., leading to a roughly 3% drop in the pharma index, the largest decline since mid-May. Overall, declining issues outpaced advancers on both the NYSE and Nasdaq, with many stocks hitting new lows alongside those reaching new highs, indicating increased market volatility. Trading volume was notably higher than average, suggesting heightened investor activity amid this uncertain landscape. As this day wraps, the question remains, are these market movements a sign of fundamental shifts or just short-term fluctuations? Share your thoughts. Do you see this as a temporary dip or the start of something more substantial?